Good morning, everyone. Thanks for joining us this Friday morning, and hello to you if you're watching this later. This is our optional Friday session. The reason we're doing these sessions on Fridays, we used to have tutoring during the week at various times. We'd have 4 or 5 different sessions, and repeatedly we would hear from students that they couldn't make the session because it didn't fit in their schedule. So this semester we decided to try something different, and that we're going to have supplemental sessions on Fridays. This Friday I'm running it, Dr. Teets. Other Fridays Haley might actually take over the session. We'll flip roles, and I'll be the moderator, and she may be leading the session on Friday. These sessions are not required, but we will go over some homework problems and maybe go in more depth over some concepts that we don't have time during the regular week. So this is just meant to be an extra help session. There will always be times too to ask questions about any of the material. This is also an opportunity if during the week you're struggling with something, you can send me an email ahead of time and say, I'd really like it if you go over this more or something, and this is the venue I can do that in. So sometime before, say, Thursday afternoon, if you let me know about something you'd like me to go more in depth with, I will certainly try to build that into this Friday session. We don't have these every Friday. We have most Fridays, but you'll see if you look at the syllabus, the schedule's in there. So we're going to go ahead and get started. There is no video feed today. We're doing this from home or wherever we are, so there's really not a video feed needed. And we are going, first I'm going to hit a reminder, since it is still early in the semester, what's due tomorrow. Tomorrow, Chapter 1, Part 1 homework is due in My Accounting Lab, and also the course intro quiz. You do want to go into My Accounting Lab, click on results, and make sure you can see the results there. If you can see them there, I can see them there. All the assignments for this class are in My Accounting Lab. You get 14 days of free temporary access, so there's no reason to wait. And also, just a heads up, I seem to be sending I send a lot of emails these first couple weeks, and I send those through the announcement feature in Blackboard. So you can either catch them on your email, or you can always go back to the announcements in Blackboard, and they'll all be there as well. And I do want to point out that if you're live, attending this live, Haley is in the chat room, and she can answer questions if you have questions as we go. I'm kind of keeping an eye on it too as we go. Okay, so I'm going to get started with some of the content I had for today. I want to pick up with what we left off on Wednesday. On Wednesday, we said the accounting equation was assets equal liabilities plus equity. We'll see that in a few minutes here. But equity, we said, was composed of 2 main things. One is paid in capital, which is like common stock. So this is where people invest in our business. They give us so much cash, or other things. They give us something, and in return, we give them shares of stock in the business. So that's called paid in capital. But we also have something part of equity. Another chunk of equity is retained earnings, and that's what I wanted to talk about right here. Retained earnings represents the amount earned and kept by the organization. And if we're looking at a formula to come up with retained earnings, it's going to be this running total since the beginning of our business of all our revenues minus all of our expenses minus all the dividends paid. So that's retained earnings is really kind of a cumulative total of our earnings to date, less any expenses and less dividends paid. Now, notice retained earnings. To get retained earnings, it's this running total of revenues, expenses minus dividends. That is not the same thing as net income. Net income is revenues minus expenses. Net income is when revenues are greater than expenses. If expenses are greater than revenues, then we're going to have a net loss. And typically we put brackets around it, around the word loss. That's what's saying loss is a negative. So we're going to see a negative if revenues are less than expenses. We can show net income for a month. We can show it for a quarter, for 3 months, or we can show it for a year or from some other period of time, but net income is always for a particular period of time. Retained earnings you subtract all the dividends from, because it's a running total. Net income, the dividends we pay, never, ever, ever impact net income. This next slide, just to refresh you, this accounting equation is assets equal liabilities plus equity. So we had that on Wednesday, assets equal liabilities plus equity. So let's do one more practice example. So if we know equity is $600 and liabilities are $500, what are assets? Well, we know the accounting equation is assets equal liabilities plus equity, so we can fill in those numbers that we're given. We're given equity 600, liabilities 500. We can add those up, and we know that our assets will be 600, or assets will be $1,100. Okay? So that's not too bad. You really need to know that accounting equation. Know it cold because you're going to see it the whole semester. Assets equal liabilities plus equity. Let's do another example. I have 3 of them right here. Okay, now monthly revenues are $1,000 and monthly expenses are $400. What are the results of operations for the month? Well, results of operations is another term for net income. Yes, and the answer is 600. And I should also say a lot of what I'm doing here today is in the PowerPoint file for Chapter 1, and that's really where we'll be on Fridays. If I have extra handouts on Fridays, I'll post those on Blackboard. But this is in the PowerPoint files for Chapter 1. Okay, absolutely right. I got an answer in the chat window of 600. Good job. And what we're going to see here is the answer is 1,000 minus 400. So when we talk about results of operations, that is another term for net income. So we have some terms that kind of mean the same thing. So net income is the same as results of operations. And then I have one final example here before we move on. In this one, we're told beginning retained earnings is 500. Net revenues are 600, expenses are 200, and dividends are $50. What is ending retained earnings? So we're saying that we're starting the period with beginning retained earnings of 500. We had net revenues of 600, expenses 200, dividends $50. So what is our ending retained earnings? So we think about this, and we want to see a kind of equation to solve it. We have beginning retained earnings, that's the RE. So beginning retained earnings plus our revenues minus expenses minus dividends gives us ending retained earnings. So what we see here then is our beginning retained earnings is 500, our revenues are 600, expenses are 200, and dividends are 50. So we take the 500 plus 600 minus 200 minus 50 equals 850. So the answer is $850 ending retained earnings. Okay. Okay, now we've got, there's a slew of slides in those PowerPoints, and so some of them we'll spend more time on than others. Just want to say, we said this on Wednesday, but equity, there's some synonyms for it. It could be stockholders' equity or shareholders' equity. It could be owner's equity. Owner's equity you typically have when you have a sole proprietor. It's called owner's equity because a sole proprietor doesn't have stock. But we could have stockholders' equity, we could have shareholders' equity. Sometimes we abbreviate it SE for stockholders' equity, or just the term equity. So those are all kind of interchangeable terms that we use for the same thing. Next up, this is just a review again of what we said on Wednesday. Assets are economic resources that provide expected future benefits. So that is a repeat of what we said. Liabilities are debts owed to outsiders. And then owner's equity are the insider claims. This is how much the stockholders really own in the business. So owner's equity is like our net worth on a personal basis. Now, in your textbook, it shows the financial statements for the GAAP. And one thing it does do, it shows assets and liabilities. So let's look at some example assets. Assets are these economic resources that have future benefit. So examples of assets at the GAAP would be cash and cash equivalents. So these are things like cash we have in our hand, but also cash equivalents, which are deposits we have in the bank, some other security instruments, but cash is the big one. Inventories, things that we're offering for sale. Property, plant, and equipment is land that we own for use in the business, stores that we own for use in the business, automobiles perhaps, clothing racks. Those are all considered property, plant, and equipment. So those are examples of some assets at the GAAP. Now at the GAAP, examples of liabilities include accounts payable. Accounts payable is when we owe vendors for things. So maybe the management at GAAP runs into Staples and has to buy office supplies and signs an IOU, basically says invoice us. That's accounts payable. Those are debts that rise in the ordinary course of business. Then we have federal and state income taxes payable. The organization owes taxes, so that's a payable. Long-term debt, this is loans that they've taken out. Then we have, I always think it sounds like a mouthful, current portion of long-term debt. That is simply the amount of our long-term debt that's due in 20 years that we have to pay this year. So it's just pulled out separate from that. So those are examples of liabilities. Now this accounting equation that we just reviewed, again, owner's equity, also known as stockholders' equity. The accounting equation is assets equal liabilities plus stockholders' equity. So what we were seeing was that second line, assets equal liabilities plus stockholders' equity. However, we can write it assets minus liabilities equal owner's equity or stockholders' equity. Remember, we're using these terms owner's equity, stockholders' equity, equity interchangeably at this point. It doesn't matter to us. So we can do assets minus liabilities equals owner's equity. We could have assets minus equity equal liabilities. We can flip it around to solve for any of those terms. And then finally, the bottom line there, assets equal liabilities plus, we normally say equity, but equity is also paid-in capital plus retained earnings, which we said earlier. So we can expand this equation, assets equal liabilities plus stockholders' equity. We can expand it to assets equal liabilities, and then that stockholders' equity can be expanded to paid-in capital plus retained earnings. So those two things together. So paid-in capital is the amount stockholders have invested in the corporation, and retained earnings is the amount earned and kept for use in the business. So retained earnings isn't physically anything. It's not cash. It's just a running total of all our earnings to date, less all our expenses to date, less dividends paid. So it's the amount retained. By the way, on your exam, I'm going to deviate for a minute here. On your exam, you'll be allowed to take an 8.5 by 11 piece of paper with you into the exam. You'll be able to write on both sides or type or whatever. And we'll talk about the exam closer to that time. But there's certain things I would put on my exam sheet as reference. This is a big one. The accounting equation being assets equal liabilities plus equity, but also that stockholders' equity can be broken down into paid-in capital plus retained earnings. So this is a really good thing to put on that sheet. Again, paid-in capital is the amount stockholders have invested in the corporation. And then, so we have Paid-in capital, retained earnings. Now we can break retained earnings down further because retained earnings is composed of three things. And again, these slides are in the PowerPoint. We have revenues for retained earnings, expenses, and we have dividends. So if we take revenues minus expenses minus dividends, that will give us retained earnings. And to follow up on that, to make that point, if we're talking about retained earnings, revenues will increase retained earnings, expenses decrease retained earnings, and dividends decrease. So that's important to know too. So in equity, revenues will increase retained earnings, expenses will decrease retained earnings, and dividends will decrease retained earnings. And when we talk about retained earnings, I just want to call your attention to a page in your book. Exhibit 1-5 that's a good one to refer to later. So when you talk about the retained earnings, how we get it, Exhibit 1-5 is a good one, so you just might want to make note of that. What we're going to do now is we are going to do, we had done short exercise 1-1 in class, and I'm going to just, I had it here because I think in one of the classes we didn't get through the whole thing. So in this, we're solving for the component of the accounting equation that we're not given. So in the first example, we had to solve for total assets, which is basically taking total liabilities plus stockholders' equity. The second example, example B, we are not given stockholders' equity, so we need to take total assets of $135,000, subtract total liabilities of $57,000, and we get total stockholders' equity of $78,000. And then the last example, we're not given total liabilities, so we will take our total assets of $401,000, subtract total stockholders' equity of $356,000, and we get $45,000. Okay, but what I really wanted to get to was short exercise 1-8, and this is kind of a fun one. In 1-8, we have a series of items, and these items are either going to be assets, liabilities, or stockholders' equity. So some of these we've talked about, some we have not. So what I'm going to do is I'll list it, I'll pause 5 seconds, you take a stab mentally at it, and then I'll tell you what it is and why. Okay? So this is short exercise 1-8. I believe this is in next week's homework, and I think it is a complete match to next week's. I don't think there's any changes in it. Most of our homework, when we go over it here, the numbers will change in your homework. This one doesn't have any numbers, so I think it is a match to what you'll be doing for the homework next week. So the first one, so we have to identify whether it's an asset, A, liability, L, or stockholders' equity, F. So first one, accounts receivable. Take a mental guess. And some of you who have had accounting in high school should know many of these. So accounts receivable. Accounts receivable is an asset. Accounts receivable represents what people owe us, what our customers owe us. So it's a future economic benefit. We're going to be getting cash. Item B, long-term debt. Is that an asset, liability, or equity? That is a liability. What we owe others, our debts, are liabilities. Okay, next one, merchandise inventory. Is that an asset, liability, or stockholders' equity? That is an asset. Yes. Okay, now the next one, D, prepaid expenses. That is actually an asset. An example of a prepaid expense is, let's say I have car insurance with Progressive Insurance, and they give a discount if you pay it a year in advance. So let's say my car insurance is $1,000. So I pay $1,000 on January 1st, and that represents my insurance for the whole year. So that whole year, I have a prepaid expense. I have prepaid insurance because I haven't used it up. I don't use it until time passes by. So that's considered a prepaid expense. It's an asset because it has future economic benefit. If I cancel my insurance today, I get a refund of everything I haven't used up yet. So that is an asset. Okay, item E, accrued expenses payable. That is going to be a liability. Here's a tip. Whenever you see the word payable, payable means usually, I can't think of too many cases where it wouldn't be true, payable means it's a debt. So if you see the word payable, you're pretty safe picking liability. Okay, item F, equipment. Yes, yes, yes. It is an asset, so it is an A, yes. Yeah, you're free to type the answers in the chat window if you want. That's good. G, notes payable. Yes, it is. Yes, it is a liability. And again, we see that word payable. So a note payable is when we go to a bank and sign a promissory note. Now, item H, retained earnings. Item H is actually going to be stockholders' equity, S. Retained earnings, remember that stockholders' equity is composed of two components. We have paid-in capital, which is typically common stock, plus retained earnings. So that is stockholders' equity. Good. Okay, so then item I, land. What would land be? Yes, absolutely. A, asset. Land is an asset. J, accounts payable. What would that be? Yes, you got it. Yes, it's got that magic payable word in it, so we know it's going to be a liability. Okay, K, common stock. Yeah, I see it's already coming up. Yes, yes, it's stockholders' equity. And then finally, L is supplies. And this one, yes, absolutely, assets. If I was going to go into this explain. Supplies is when, say, we go to Staples and buy 3 months worth of copy paper. Though that copy paper, because we haven't used it yet, is considered an asset, and we call it supplies or something like that. So that's it for exercise 1-8. Now we're going to go into this one. Next one's kind of fun. We're going to do another homework exercise. And again, this homework exercise is also next week. I just want to leave plenty of time in class to work on the financial statements, so that's why I'm putting this one here. And this one you can work it out, but it's kind of fun to go through it. So in exercise 1-17A, we are given information about a company that has current assets of $180 million, property, plant, and equipment of $300 million, and other assets totaling $110 million. Then current liabilities are $105 million, and long-term liabilities are $280 million. Now, it asks us a series of questions to write their accounting equation and then to answer questions 2, 3, and 4. This is an example of an exercise that I'm going over the exercise in detail here. When you go to do it in your homework next week, it will have different numbers that'll be essentially the same. Okay, so well, it will be the same, just substituting different numbers. So now what we're going to do is I need room to write on the screen. So what I've done here is I kind of pushed the data to the bottom of the screen. So back here, requirement 1 says use these data to write the car wash's accounting equation. That's what we're doing right now. But to give myself room, I moved the data down to the bottom because I want to be able to show you where I got the numbers. So the accounting equation is assets equal liabilities plus stockholders' equity. So let's go through. Now see, in the data down below, it told me that the car wash has current assets of $180 million. Okay, that's coming straight from there. Property, plant, and equipment is $300 million. And other assets, $110 million. So I'm getting those three numbers directly from the homework exercise. I have identified the assets. So when I add those up, I get total assets of $590 million. Now, next thing, liabilities. Liabilities, it tells me down below, current liabilities are $105 million, and long-term liabilities are $280 million. So if I add those up, I get total liabilities of $385. And then finally, stockholders' equity. We're not given stockholders' equity, so we need to figure it out. So what we're going to do here is we know that assets equal liabilities plus equity. That's our accounting equation. So if we're given assets and liabilities, we can solve for stockholders' equity. So what we're going to do here is we're going to take 590 minus 385 gives us stockholders' equity of $205. Yes. Okay. So our stockholders' equity is $205. By the way, this exercise is a nice example too of, see above, it says all amounts are in millions. And see, we don't have 6 zeros after all of these. When you do this exercise, and any exercise in my accounting lab, don't enter the 6 zeros because you're actually talking about quadrillions or something, trillions at that point if you add 6 more zeros. A rule of thumb is when you're entering answers in my accounting lab, you're going to enter them just like we do in class. You see here, I'm not adding 6 zeros to this. That stockholders' equity is actually $205 million. But since it says amounts in millions above, we don't add those. If you ever need to figure out how you need to add it, enter it in my accounting lab, just click on the Help Me Solve This button. The Help Me Solve This button is going to give you an example of what those answers should look like. And there's no penalty for using the Help Me Solve This. What we've done right now is we have written the car wash's accounting equation. That's that bold line. And well, it's right below. It's 500. Their accounting equation, I don't actually have it written on the screen, but the accounting equation is 590,000 assets equal liabilities of 385,000 plus stockholders' equity of 205,000. That's what that first question is asking. Okay, so now back to look at the exercise. So now we have the next 3 questions. The first question, number 2, is how much in resources does the car wash have to work with? The third question, how much does the car wash owe creditors? And then the fourth one, how much of the company's assets does the car wash stockholders actually own? So we're going to answer those 3 questions. I've got to leave this screen so I have room. I'm going back to what we just had on the prior slide, and we're going to answer these 3 questions. So we're answering questions 2, 3, and 4. So the first one. So this is where we were. We knew our assets were 590,000. So when the problem asks us what resources we have to work with, $590, that's our assets, that is our resources to work with. So that's the answer for question 2. Next question asks how much is owed to creditors. Well, the total liabilities are what are owed to creditors. And then finally, the fourth question is the one that gives people the most problem. It was asking what was actually owned by company stockholders. What do the company stockholders actually own? They own the stockholders' equity. That represents the stockholders' interest in the business. So the 205 is the answer to the fourth question. Okay. Now we're coming to the part, so I've reached the end of what I wanted to do extra for today, for this week. And actually some of it relates to next week, because next week's a very busy week. We only have the one day. So now what I want to do is I want to open it up for questions. So this is your chance to ask me any questions you might have. You're welcome to always email me, of course, as well. So I can open it up for questions, and that kind of brings me to the end of what I'm talking about. The major questions I've seen online from people, the emails I've gotten, and you probably all are fine because you're on Blackboard Collaborate. There hasn't been one theme. If you need help with My Accounting Lab, you can always email me. But if it's a technical question, you may want to go to their tech support. I have the link on Blackboard, and they have 24/7 chat support. But you can always email me, and I'll be a gatekeeper and tell you where you need to go. So, questions from anyone. We are at the conclusion of prepared material. I hope it's been helpful. And again, put it in your back pocket for next week's homework, because the couple that we went over are on next week's homework. On Wednesday next week, we're going to be doing some real basic financial statements. We're going to do an income statement and a balance sheet. So I wanted to leave plenty of time in class for that, so that's why I uploaded that to this. And good morning, Pat. I know we were talking on email last night, so I wanted to say hello. Is the course intro quiz, I have a question, great question. Is the course intro quiz about the syllabus or chapter number 1? The course intro quiz is about the syllabus. It's what we covered in class on Monday and over the syllabus. Okay, this is a question from Pat. Are the quizzes in the exam part of Blackboard? All quizzes in the class are in My Accounting Lab. The exam is in My Accounting Lab. Blackboard we use for Collaborate and kind of a filing cabinet. So we're going to everything's going to be in My Accounting Lab. Any other questions? I'm going to stop the recording, but I'm still here. So if you're watching this live, email me if you have, or if you watch it later, email me if you have questions.